We primarily invest in software, early stage tech startups, but our portfolio spans more than 3,000 companies around the world, more than 80 countries. So I think in terms of what Thai startups can learn from US startups or maybe successful startups, I think what is definitely critical is that you have a clear customer target that you're going after. So I think one of the challenges, especially for very smart, very technical founders, is that they can build really incredible technology and then they need to focus on who will actually buy this product. 500 has been investing in Southeast Asia since actually very early days. So our first investment into the region was in 2010 or 2011.
เรามีโอกาสได้มาที่ซิลิคอนวัลลีย์หลายครั้งนี้เนี่ยมีโอกาสได้มาพบเจอกับสตาร์ทอัพแล้วก็ในฝั่งของอินเวสเตอร์ด้วยเพื่อที่จะมาทบทวนนะคำตอบของคำถามที่ว่าสตาร์ทอัพเวลานี้เนี่ยเป็นอย่างไรกันบ้างในเชิงของโอกาสของสตาร์ทอัพรวมถึงสตาร์ทอัพไทยเองเนี่ยเป็นอย่างไรนะคะครั้งนี้เนี่ยเราไปพบเจอกับคริสเตียนนะคะซึ่งเป็น CEO ของ500กองทุนใหญ่นะคะของโลกที่มีการลงทุนในเทคคอมพานีชื่อดังนะไม่ว่าจะเป็น Grab นะ Twilio Reddit หรือว่าทาง Animoca นะคะ
I'm Christine Tsai. I'm CEO and founding partner of 500 Global. 500 is a global venture capital firm based here in Silicon Valley. We have been investing globally since 2010, so this is actually our 15th year. We primarily invest in software, so early stage tech startups. But our portfolio spans more than 3,000 companies around the world, more than 80 countries. And we firmly believe that great founders, great technologies are in all corners of the world. So that is why we have been investing around the world since 2010. Definitely fundraising. I will say, just for context, for every startup, fundraising is always hard no matter what. Definitely in the last couple of years, especially after coming off of such a long bull run and peaking in 2021, fundraising has been very challenging across the board for a lot of reasons. There's been a lack of liquidity for investors and a lot of investors pulling back from investing in startups and tech and the markets overall. So I think definitely in the US, it really depends on what kind of company you are. I think that there is still a lot of capital being deployed, especially at the early stage and especially into AI companies. So it is really, if you are a very early stage company, most likely it's not as affected. You can still potentially raise kind of that initial small round, but I think as you progress, the bar to raise like a Series A or Series B institutional round is definitely much more challenging. And then at the growth stage, despite it actually being potentially a good time to invest because valuations have corrected, it's potentially even more challenging at that stage. I actually think right now, despite the fact that there is a drop in funding and it's a tough time, this is actually a very good time to be investing into venture and tech. So I would actually really encourage anyone to ensure that they are investing right now because one, when the markets are challenged and when there's kind of more crisis moment, that's probably one of the best times to invest. You'll be able to get into companies, certainly better valuations, and also right now with all of the innovation happening in AI and there really being a huge shift in terms of technology, this is a time where you want to get in because eventually things will grow. And we've seen in history that these are the good times to invest, especially at the early stages. It's definitely quite unfortunate anytime that happens, and I think it may potentially discourage investors from investing into tech or startups, but I do think that it happens anywhere in business. Like you'll always run into these types of bad actors or situations. So I think that it potentially may get more visibility because there's a lot of attention on tech startups and unicorns and whatnot. But I think that it is it is something that just happens all across the board in business. So that doesn't necessarily affect our business in terms of wanting to keep investing in companies. I do think it has brought attention to a lot of the excitement around investing into companies and how much of the power dynamic there is between founders and investors. I think, especially in Silicon Valley, it definitely has been very kind of weighted towards the founder. So I think it just calls to attention things like governance and ensuring that there's good checks and balances, especially as the companies scale. Most companies, I think, don't start out to deceive their investors, but I think as they get more pressure and want to show up and to the right, that's sometimes where that bad behavior comes in. Yes, and I think even then, for many investors, sometimes they do that type of diligence at the early stage, but there really is not too much to diligence because a lot of times there's just a product or not even, very early product, and the founders' backgrounds could be totally fine. So, but in any case, I think for many investors who have been impacted by these types of investments or others in their portfolio, it's always a chance to revisit, like, what can they do better to catch? And unfortunately, sometimes you won't catch it. So
yeah, it's very hard to figure out sometimes.
Yeah. I think that there is potentially a bias towards the younger founders just because that's been held up as a very those have been held up as success stories, whether it's through things like Forbes 30 under 30 or just what gets attention. So a lot of times when investors or people think of the typical startup founder, it's young person, hoodie, coding, usually a guy. So I think that's often held up. But I think the reality is the average age of an entrepreneur is actually much older than that. And I think in terms of any pressure it puts on founders, I think the pressure exists no matter what, but I do think that one of the downsides of that is that for many investors, they think they pattern match and they think that's the type of founder, whether they acknowledge it or not, that's the type of founder that will be successful. So if you have founders that come in that look very different or have an atypical background, then they may subconsciously already think a little bit less about their potential or their company. So I think that ideally there's more attention on great companies that have maybe more experienced founders or just founders that don't look like the typical founder. 500 certainly has invested in a lot of founders like that from many backgrounds. So so hopefully that continues. I think if you're building a company or if you're trying to get into venture, it's already it's already a pretty hard path just because it's hard to build a company. Being in venture, there's not there's not a lot of spots, but I think on one hand there are definitely more women that are building their own firms or in a GP level or just coming into the industry than there were before. That said, we do have a long way to go. I think the percentage of female founders that get funded is still quite low, like very, very low. And I think because it definitely applies to the broader market or the broader society, it's not surprising that women will face, or women or anyone who's just not in the majority, they will just not get the same type of access or same type of funding or connections. I generally think, though, that for any in terms of any advice to women or people who are trying to get into this space, that definitely don't focus on those numbers because it will scare everybody away. If you see that very few female founders get funding or whatnot, then of course you will think, oh, then why should I try? But I think if you're really passionate about what you're building, you will find a way. It is going to be harder, but I think it's important to focus on what you can control. I think definitely for myself, I think being obviously female CEO running this firm, there's not too many other women that do that.
Yeah.
And of course, I'm sure that there's always challenges, but I would prefer to focus on things that I can control, making sure that we have really strong performance and do well at what we do, have good relationships with our founders, and the rest we just keep going.
Yeah, just keep going, don't think too much.
Yeah, keep moving, keep building. Exactly.
Yeah. Relate to the investment, like what kind of the US startups are attracting the most attention from investors these days?
These days, it is definitely AI companies,
Okay.
and I think it's there is a lot of froth. So it's an exciting time because the technology, I think, compared to other eras in the last 15 years, it's moving so quickly. So it's not like in 1 year. It's a matter of a couple months that some new innovation comes out, either from the bigger hyperscalers or smaller companies that are trying to build. So definitely anything that's in the AI space is attracting probably the most funding. I do think that it will correct. I think it's already corrected in some ways in terms of valuations, and not just because you have AI in your company doesn't mean you'll get funded. But I will say that sectors, at least in terms of venture funding, it changes every few years in terms of what is hot and what is not hot. So right now it's AI.
Right now it's AI. Okay, cool.
500 has been investing in Southeast Asia since actually very early days. So our first investment into the region was in 2010 or 2011. And since then, obviously, we have been investing in the region broadly in Malaysia, Singapore, Indonesia, Thailand, Vietnam, Cambodia, and many other places. It is definitely a market that has grown a lot since we started investing in the market. And I think right now there are probably a number of investors who are not as bullish on the region because of the challenges in the last couple of years with valuations dropping, lack of liquidity for a lot of these tech startups that raised a lot of funding. There have been a number of unicorns that have come out of Southeast Asia, but now with this market, they've probably been marked down quite a bit. So it is a tough time for the region right now. But like I said earlier, it's actually a great time to keep investing. For us, we entered the market long before a lot of people in Silicon Valley didn't know what Southeast Asia was. So they thought it was India. So I think we really look at it from a long-term lens. So we are long-term investors, especially because we invest at the early stage. So knowing that there are market cycles, we continue to be excited about investing in the market in Southeast Asia, and I think that the market just needs to mature. It is not, a matter of a couple years. It's many decades for a good startup venture ecosystem to be sustainable. So I think that's generally how we look at the market, even though right now it might be a tougher time in, say, Thailand or Malaysia or wherever else. So I think in terms of what Thai startups can learn from US startups or maybe successful startups, I think what is definitely critical is that you have a clear customer target that you're going after. So I think one of the challenges, especially for very smart, very technical founders, is that they can build really incredible technology, and then they need to focus on who will actually buy this product. So we definitely have seen a lot of founders who forget that ultimately to build the company and then really scale the company into hundreds of millions of dollars in revenue or go public. Ultimately, it's about selling, right? It's about who is your customer? Is this something that they will actually buy? How do you retain them? So I think those types of business fundamentals are it's not necessarily just for Thai startups. It's every startup, especially if they're not in an ecosystem that has easy access to these types of resources. So I think that's what we have found when we invest in companies that are outside of Silicon Valley. It could be even other parts of the US that a lot of that, the access to mentors or resources is lacking. And that's one of the fundamentals in terms of like, what is really your business model? How do you identify your ideal customer? How many customers you should be talking to validate? So that's one. And the other, I think, is this is very, I think, country or region specific, but I think oftentimes when we see founders coming from outside the US to say here, culturally, I think it is a bit of a learning curve for them. You really have to hustle. You really have to do everything possible to raise money or close a hire or acquire a customer. And sometimes we have found that if you're not comfortable with that, then many founders will be just reluctant to, they don't want to annoy people.
Yeah.
So I guess in terms of B2B companies and B2C, you're right. They're very, very different types of businesses. And I think even within those different segments, there's also many different types of business models. I think for B2B, some of the considerations are certainly around like how do you make the business model more predictable? So you may be going after small businesses or startups and then eventually scale into enterprise. Many companies do that. They start with more product-led growth. And then as they mature, they may get to some level of ARR, but to really scale up, many of them want to break into enterprise. And that can be a big shift. Like even some of the more notable companies are still, like they still have to prove themselves in the enterprise market because that's a very different game.
Yeah.
It requires really like a very strong sales effort,
Yeah.
go-to-market effort. Some start enterprise and then expand to long tail. There's a lot about the pricing model that you need to refine in terms of what will create that predictable revenue and growth year over year. So those are, and how many customers churn out. So I think you want to make sure that customers are not churning out after like a short period of time and you lose the customers.
Yeah.
And then I think on the B2B side, I think there is a perception that consumer, especially nowadays, many investors do not like because they feel like it's tough and consumers are fickle and it's just hard to acquire. But I'm still actually really interested in consumer companies. 500 has invested in consumer companies for a long time. And I think ultimately it's really about the fundamentals, strong team, strong product and customer. Ideally, there is a business model. We, as much as I love consumer, we don't like to invest in companies that don't know what their business model monetization will be long term. But it's still, you know, it's still an exciting space. And I think especially right now with a lot of the growth of AI technologies, we're going to see companies that are built that were not possible before. So that I think is exciting. Here, it is the startup culture and tech is very mainstream. You can walk into the Blue Bottle across the street and you probably will see a lot of people coding, a lot of startups, maybe VCs meeting. So it's just very prevalent in this area because the innovation cycles have been going on for, I don't know, 50, 60 years. So I think a lot of people forget that. It's just been part of the DNA and part of the culture for such a long time. And it's had many cycles to, you know, founders building a company, they get funded, they eventually exit, creates liquidity, and then that capital then goes in again and invests. So I think the kind of the epicenter of technology innovation, a lot of that has been here for such a long time. So in terms of other markets, a lot of times we see investors or founders getting quite discouraged because they don't see the same types of results. But I think we always like to remind them that this really needs to be a long-term vision. You can't expect results to happen in 5 years or 10 years. It's not going to happen. So it really needs to be looked at with a long-term lens that this type of environment, it may not be fully replicated, but there's some of the qualities of a Silicon Valley mindset that you can bring into your markets, but it really takes many stakeholders. Certainly the government has a big influence in many emerging markets to help facilitate entrepreneurship, make it easier for companies to build policies. There's definitely investors. The startup deal flow and talent oftentimes is already there. Or there's a lot that can be done from the university level to help train or encourage students to, say, go into computer science or data science or you know whatnot. So I think that some of the key qualities around people wanting to take that risk to start a company, not join a big company, or knowing that the vast majority of startups fail. All of those things I think really do need to be recognized, not just within the startup space, but the society or country more broadly. I think if you are really trying to encourage startup innovation, but you're in a market where failure is seen very negatively, or if they do exit their company and it's not a good outcome, that they are shamed forever, like then no one will want to start a company, right? So I think those are the important components that need to be fixed or need to evolve over time.